Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we are looking for a 5-wave impulsive structure to the downside, where wave 1 is finished, wave 2 soon to be finished potentially, before then a wave 3 to the downside. In this scenario, you can see that the 0.382 has been touched multiple times, which is a less common target for a wave 2, as the most common target for a wave 2 is the 0.5 to the 0.786 Fibonacci taken from the high to the low of this wave 1. That means we are looking actually for price to move up just a little bit more between 28.9k and 29.5k, which also includes the golden pocket here between 29.1 29.2, which is in confluence with the target box over here. So that's definitely interesting. You can also see, by the way, the 0.5 has been missed out once before. So in this scenario, it would be nice to see at least a little bit more upside before a potential move towards the downside. Now, if we then look inside this structure for potential wave 2, then a WXY could be on the cards here, with a zigzag in a wave W, where wave C went to the most common target of a wave C, which is between the 1 and the 1.236, taken from the low to the high of A to the low of wave B, which was very nicely respected, as you can see, for then a 3-wave structure in X, now looking for eventually a wave Y to the upside, where the common target for Y is between the 0.618 and the 1.236, between 28.7k and 29.4k, but the most common target area of like this whole range is the 1 to the 1.236, which is between 29.1k and 29.4. It has to be said though that in a sideways double combo WXY, wave W and wave Y are not allowed to have the same structure. So W over here being a zigzag gives low probabilities, wave Y is a zigzag. Instead, wave Y preferably is then a flat or a triangle structure. So that is something we have to keep into account. And also, if price continues towards the upside in potentially zigzag fashion or just more like impulsive, probabilities can of course increase that once we reach this area, we will go through and reach new highs instead. So this is very, very interesting. Wave W and wave Y can be the same structure, but then we're talking about a sharp zigzag in a 535 correction 535, which has a very sharp angle against the trend. And as you can see at the moment here, this is very horizontal and not sharp at all. So therefore, probabilities increase. Wave Y has to be either a flat or a triangle in a WXY scenario. Now over here, we have a potential 112 bearish scenario where wave 2 is already finished. The most common structure in a wave 2 is a zigzag based on statistics. So if this is a wave 1, we then have that same ABC to the upside in a wave 2. It did miss out on hitting that 0.5, right, for this wave 2. But then you're going to be looking for another wave 1, 2, and then a much bigger 3 to the downside. Now, preferably in a double 1-2 scenario, what you want to see is the second wave 1 taking the low of the first wave 1. So you have high degree wave 1, high degree 2, lower degree wave 1, lower degree wave 2, and then a bigger move eventually to the downside. Higher degree being blue in this case, lower degree is white. But as you can see, it's not really a nice contracting diagonal structure, which is preferred and by far most common. But also this second wave 1 did not take the low of the first wave 1, which is lowering the probabilities a little bit of a double 1-2 scenario for then a very, very big 3 to the downside. It can still very much become a wave 3. It's just probabilities in the end, of course. And also this wave 1, for a wave 1 you want to see a 5-wave structure, either in a diagonal or an impulse. And if we look at this structure, it's quite difficult to count a nice diagonal in here. You can only have 1, 2, 3, 4, and then this being a wave 5, which is then extremely long, as you can see, or 1, 2, 3, 4, but we never got a wave 5 to the downside. So therefore the probabilities are higher. This is a corrective structure, also looking at the overlap over here. If we look at the impulsive structure towards the upside, well, looking at this first move up, it looks very 3-wavy, right? In an ABC instead of a 5-wave structure. So if this is a 3-wave structure, the only move towards the upside, which is quote-unquote impulsive, meaning an ending diagonal type of move, and then ending this much bigger move towards the upside, where you then have a 3, 4, and you're going to be looking for a wave 5. This wave 5 can be an ending diagonal. The problem is that this final leg will not take the high as it stands because this move is not big enough. So you have a wave 1, you over here have then wave 2 reaching the golden pocket, common target for a wave 2 in a contracting diagonals by far most common. Then you have a wave 3 to the upside, but wave 3 in a contracting diagonal is not allowed to be longer than wave 1, meaning the target for wave 3 is a maximum over here being the 1-to-1 at 29.1k, most commonly between the 786 and the 886, 28.9k to 29k, which then means you're going to have a wave 4 in 3 waves and then a wave 5. But if we then take a trend-based fib extension from the low of 2 to the estimation high of 3 to the low of 4, and we put it on the target area for a wave 5 in a contracting diagonal, then you can see that the high, meaning the maximum target, the 1-to-1, which is the invalidation, is sitting at 29.5, which doesn't even come close to the wick high. So therefore this scenario at the moment has lower probabilities, but it just increases the probabilities of potentially a bigger range to come or a bigger corrective structure to come with more downside. So we always have to look at bullish and bearish scenarios, but this bullish scenario here at the moment is not looking that strong for continuation to the upside. Instead, probabilities increase for a continuation of the range or eventually a drop to the downside, which very much depends on the reaction we get around this target box if price can make it in confluence with the golden pocket. So we make sure to keep an eye on that. Another more bullish scenario, but this is an extension of the range, is that we have an A or W to the downside, corrective structure in B or X, and then a move down in a C or Y. If the first structure over here is corrective, very, very low time frame counting if you want to figure that out. So I prefer to wait and look at the range. But if this is an A or W, you expect a C or Y and then continuation back towards the upside. But this is something that we will only discover really if price can reject somewhere above or here already and eventually move down. And then depending on the target and the impulsivity, we can get better probabilities for eventually continuation up or we go towards the downside. Now, if we look at these CVD divergences, I do have bullish CVD divergences over here from this low, higher low in price, lower low on the CVD. That's exactly what you like to see. And currently there is no bearish CVD divergences, lower high in price, but not over here on yellow, a higher high on the CVD. As you can see with my horizontal, like the horizontal line of my mouse over here, you can see it didn't cross the horizontal line, so there's no bearish CVD divergences on the 15-minute over here. And the target for these bullish CVD divergences is this high over here, which would also play a role in then maybe going towards that golden pocket and observing the reaction over here. It's all about observing the reaction, especially after this volatile move over here, that if over here we get some solid, like if price, of course, first of all can make it here, but if it does, you know, you want to see your entry requirements. Do you get a market structure change, bearish CVD, RSI divergences, or whatever you are using? If you can check all the boxes, then it is, of course, a potential interesting short. But if we start to see other things over here, like bullish divergences building below resistance, of course, the probabilities increase for continuation. But as it stands at the moment, the probabilities locally are higher on the micro to look for a more bearish scenario in a bigger three-wave structure, mainly because of this structure over here, because this looks very three-wavy. Probabilities are higher. We will eventually either take this low or at least see another move towards the downside. Now, more locally, meaning like even more locally over here, the upside currently has some good probabilities, but again, in a WXY scenario, that is, we could be looking first for a move down. So one, based on Elliott Waves, does expect price to still find a bit more upside, but in a wave Y, preferably you have a flat. So you would first come down before a move up, or you're gonna range in a triangle, but it's too early to call. So basically on the micro, we're looking for either 1, 2 continuation down in a 3, or we are looking for an AWBXCY, right? So over here, bearish three-wave structure at the beginning over here gives us a little hint that we would still be looking for another move down, at least either directly or we first move local, probabilities, we first move a little bit higher, but that can of course go in ways like this with a flat scenario. So in general, we have to observe the reaction if price can make it to the target box, and of course keep an eye on what is happening more locally. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.